Hey guys, Don Durrett, Gold Stock Data. I updated my optionality list and I'm going to go over it with you. It's it's about 80 names, so it's going to take an hour to go through it. Some of them I'll go very quickly. Um, I think we're getting really close to a breakout on the miners, and once that happens, they're all going to get, I think, revalued higher fairly quickly once it starts. It's like uh, it's hard to say when this is going to happen, but I just have a feeling we're getting close, and so that's why I'm sharing this list with you because it's kind of I think we're getting close to the last chance where these stocks are valued at these low valuations. I think a lot of them are going to double fairly quickly, and when they double, you lose half your upside. So if it currently prints as a 10 bagger, it's going to be a five. Once it goes up 100%, it's a five bagger. Goes up another 100% and then it drops another 50%. So if you don't entry, getting in early is very important. So that's why I create these lists so we can do them. Once the HUI gets above 450, I might not even do these anymore. Okay, so let me share my screen. Okay, I updated um, the average gold in the ground per ounce, the market cap divided by ounces. Gold producers 245, gold developers 52, and explorers 33. Um, the one thing about the explorers, you get a real big gap. You get a lot of them that are, 20 or less, and then you get a lot of them are $100 or more. Not a lot, but you see, so there's tends to be a big gap in the explorers. It depends how advanced they are, the grade, and you just see really big gaps. But the average is 33, and I think it's going to go be 50 fairly soon. Developers $52, and I think this is going to get up to 75 fairly quickly. Producers 245, we can expect that to get over 300. Silver producers, and one thing you have this big gap, so you can see the re-rating. So when a company's once they get into production, they can get re-rated 5x. That's a big, big jump. Now, it might take them a year or two to get re-rated all the way up. But the one thing, the earlier you get in with these developers, the more leverage you have. So, and it shows you that. Um, in silver, it's even more pronounced. It's almost 6x, 85 cents today for average developer. And once you're in production, the average is $4.50 in the ground. So you can see that's why I like these developers. You get this huge leverage. And now the current free cash flow um, right now cost break even is 1950 for gold and 27 for silver. So you have I'm using a current spot start of 3,333. You have a margin for gold miners at 1350, which is huge. As long as they can stay above 1,000, they're doing well. 1,000, it's not quite 30%, um, but it's close to 30. And 30 is kind of the healthy area. I consider 25% to be marginally healthy, 30 to be healthy, and 40 to be, excellent. So we're at 18% right now for silver miners, the free cash flow margin, which isn't healthy. They need to get to 25, which is about 36, I think. Yeah, so they got to get to $36 silver to be healthy this year and then maintain that. And 25, so 36 they're healthy, and then once they get to $38 silver, then they're in really good shape. So if we go to 38, 38 is 30%. So that's what we want to see. You can see down here, you can see all these optionality. So I've been doing this for a long time, all the way back here, August of 23. I've been doing these optionality lists, and I'm seeing these companies, a lot of them are still on the list. Um, so we're going to start off, we're going to do exploration. Exploration is kind of your pure optionality, um, because they want to sell these. most exploration companies, I mean, some of them will do JVs, but majority want to sell their projects. And so we can, if that's their goal, then they're going to sell at a lot higher prices. So, okay, so PG is exploration, project generator, silver. So I've sorted it by the current value in the ground. So this is the GSD ratings. 2.5 is a likely three bagger. Three is, and then three is a possible five bagger. 3.5 is a likely, and then five bagger. And then this is the first one that's upside. And then four is a potential 10 bagger. The second one is the risk reward. And the higher the number, the better. You want 3.5. I usually don't use four uh, for the risk reward. 3.5 is excellent risk reward, and then three is good, and then 2.5 is marginal, and then two is weak. And then this quality rating is kind of overall quality for the company. And then you want B plus or better, B plus, A minus. B is almost good. B plus is good, and then C plus is kind of marginally good. C's not so good. C minus is bad. So you kind of want C plus or better. So you can see on this list, I don't think I have any C minuses. Okay, so here's the current market cap, and then this is the current ounces. Now, these ounces, this is what the amount of gold or silver that I think they're going to mine. And these are the future estimated future ounces I think are mined. So sometimes I won't give companies any credit for additional, and then sometimes I'll reduce it. Like here in Silver 47, I'm expecting to go up. And then I think I have one right here, Southern Silver, I expect it to go down. Um, it's just, I'm just valuing it. I just don't think recovery rates can come into play on these. But Southern Silver says they have 350, but I only think they're going to mine um, 300. But sometimes. So that's what this is. My expectations of what they're going to mine. So here's the current value. And then this is my estimated. So this is calculated. And then this one I enter. So I'm just giving them a $1 future valuation, estimated future market cap per ounce, only $1. So they're currently at 11 cents. And I'm saying they're going to go to one. And so at that, without dilution, it's 80 million. And that would give them, with 25% dilution, so I'm not giving them an upside with no dilution, but with 25% share dilution, I'm expecting a 630%. And with 50%, it's 400%. I use this 50% because some of these exploration companies, you're going to expect them to spend a lot of money on exploration. And so you have two columns here you can go by that I've kind of highlighted kind of the expected returns. Um, and that's if we get these valuations. So I'm using $1 and $2 for silver, and then 150 to 150 for gold. Okay, we can start. That took almost 10 minutes just doing the pre-warm up. Okay, so silver dollar. Um, Silver dollar, Mexico, um, small market cap. Of only 8.5 million market cap, which was tiny, and they have 80 million ounces. So at some point, it's low grade and nobody wants to touch it because it's only 30 grams. But it's about twice that at its silver equivalent. So this is silver equivalent. So 40 million ounces at 30 grams and another 40 silver equivalent. So people are like the grade's too low, it's never going to get built. But at once we get above $50 silver, I don't think it's going to be at 8.5 million. Morannon, this is in New Zealand, 200 million. This is another one that's somewhat low grade. They have 100 million ounces at 100 grams per ton, and then the rest. So these are both silver equivalents, but it's 21 cents, which is pretty darn cheap. I'm hoping that they hold out. I uh, I do own silver dollar. I do own Moranin. I do own Southern Silver. So Southern Silver, 350 ounces. So I'm valuing them at only 300. They're currently 22 cents. Key here is what do they sell it at? Is the management team, are they patient? That's the one thing about these exploration plays is we don't want them to sell early. Kootenay, some of these are drill story optionality. Like Kootenay is expanding. Southern Silver, not so much. Marana and Silver Dollar aren't adding a lot of silver, but Kootenay is drilling their Columba project. So this is a combination. I kind of like those. I do own Kootenay. The combination of optionality and drill story because this thing could grow. Like right now, I'm only giving them 250 million ounces. I think it's a pretty solid number. 22 cents an ounce in the ground. Um, so we'll just wait and see how patient they are. Silver 47, they just acquired Suma. So th they're at 170 right now. This is silver equivalent. And then Suma is about 130, I think. So you combine those together, and their target is 1 billion ounces. I don't think they'll get there, but they get to 500 million. I'm only using, well, this 44 is wrong. So because they just acquired Suma, once that deal goes together, these are all go up. But silver 47, I do like. It's another combination like Kootenay, which I like, where you're buying silver in the ground cheap and it's a drill story combined. Argent is a low grade silver project in Australia. Um, and I think it's going to get exciting once silver prices get to $50 because there's not a lot of big silver projects in Australia. So even though it's low grade, I think it will take off. El Oro, this is mainly a tin mine, billion ounce silver equivalent, but 250 million ounces of low grade silver. It's hard to predict how that silver is going to give them value, but today you're paying 31 cents. So it's somewhat of an exciting play. I do own a Loro. I don't own Argent. Um, I do own GR. So these ones all at the top I own. They're still cheap. I bought them cheaper than this. I mean, these things have actually went up a little bit in market caps. GR Silver, it's growing. This is another drill story optionality. Even El Oro is growing in size. So 135 million silver equivalent, getting to 150 in Mexico. The grade's pretty good, 180 grams, 33 cents. So GR looks pretty solid. Equity metals I don't own. Low grade. But they're currently at 85, I think it's going to get bigger. A lot of people like this stock. 45 cents at $100 isn't super pricey. Uh, Teuton, I own this one. Teuton owns 25% of Treaty Creek, which is the Tudor mine, but you're getting the 25% paying $6 an ounce. So now we're at the gold. Um, and this is another optionality drill story because Teuton, uh, Treaty Creek is growing in size, which is Tudor's drilling, and they have their own projects that they're drilling as well. So in some respects, Teuton's a better buy than Tudor. Not only do they get 25% of Treaty Creek, but they have a 1% NSR that you also get on Treaty Creek. Tudor Gold, it's growing in size and you're getting $6, but they're going to dilute us a little bit, maybe significantly. But I think Tudor's going to get bigger. They're finding high grade gold. This was always a low grade open pit, but now they're finding high grade underground. Bravada, this is a gold project in um, in Nevada, and it's small, but you're getting $6.50. And if they find some more, like I'm not giving them credit, like so you're paying right now, you're only paying $6.50 in the ground. It's pretty cheap, and if Bravada can grow in size, just a little bit bigger, it's probably going to be a mine. I mean, when gold prices go above 3,500, I think these million ounce projects are going to get, more money is going to go into them. They're going to develop and they're going to build them. So I actually don't own Bravada because it's small, but I definitely have FOMO. I think it might work. Galway's another one I have FOMO for. This is another, this one's in Canada, have 3 million ounces, but I think it's going to grow to four, $7 an ounce at four. Um, a Blue Star, this is another in Canada, none of it. It's currently only 800,000 ounces. But the grade's pretty good. If they can grow this thing to 1 million ounces, I don't own that one. Seabridge, I don't own. I just don't know how they're going to monetize it. But a lot of people think it's going to, be a $50 plus stock. I think it's around 10 now. But at 135, you're paying $8 an ounce in the ground. A lot of people like Seabridge. I don't own it. I don't own Grand Portage, but I've looked at it. I have FOMO for it. It's in Alaska, good location, good grade. I think it's growing in size. So, $20 million market cap for 2 million ounces is kind of silly cheap. Um, um, I I definitely have FOMO, but I don't own it. I don't want to own all of these exploration plays. I have too many as it is. I feel like I'm overweight exploration. I think I have 8% of my allocation. So I become very selective. But when I look at this list, um, I Galway and Grand Portage definitely are stocks that I have interest in. Triumph is 1.5 million, paying $8, and I'm giving him no growth. And this is a project that's in the Yukon. It's going to get built. It's a pretty solid project, but these exploration plays really nobody's been interested in buying them. Well, they don't really want to sell them at these valuations, but nobody wants to, advance these. Nobody has wanted to advance these projects, and now gold's over 3,000, and they haven't really gotten revalued higher. I mean, we got Triumph at $12 million, and they have 1.5 million ounces of gold in the ground, and they're getting no value. Fortune Bay is another one. 3 million ounces valued at $8 an ounce. At what point, do people start bidding up? I don't own Fortune Bay. Big Ridge is another one I have FOMO. I don't own. 1.4 million ounces. I think it's going to grow in size, but I'm not giving him any credit for it. But they're $9 an ounce in the ground right now. But Banyan, I do own Banyan. I think Banyan's going to grow to 10 million ounces. I'm only giving them credit for seven, and at seven, it's $10 an ounce. So if they find 10 and they sell it for seven, then I think that's kind of what our upside is going to be, about a seven bagger. Landor, another project in Canada, 1 million ounces, but it's growing. I have it going to 1.5. Rockhaven, another project in Canada, 1.2, valued at $15 million. These projects, unbelievable. 1 million ounces, 15 million. 1.2, 15 million. And these are in Canada. Altamira, and this is in Brazil. They're at 21 million. They're at 1 million ounces, but I think they're going to get to 2 million ounces and maybe more. Altamira is an interesting. I actually do own Altamira. Cartier, I don't own. I almost bought it. I definitely have FOMO. 2.5 million ounces at $28 million. This is also in Canada. Roscan's as in I think it's in Burkina Faso, so people doesn't want to touch it, but valued at $12. I think they're going to find more. Most people are going to ignore it because of Burkina Faso. I think it's Burkina Faso. Getchell, 2.3 million ounces. This thing could go to three, but I think 2.5 is definite. I'm confident, and it's trading at $13. I do own Getchell. I think it's just too cheap because it's in Nevada. Gold mining, 12 million ounces of gold, valued at $13 an ounce in the ground. How are they going? We don't really know their strategy of what they're going to do with these projects. I think they're going to spin them out. They spun out Whistler, so they have project in Brazil, a solid project in Brazil, another one in Mexico. Um, so they need to spin out some of these projects, and I think they will, and then keep a chunk of them. I think they kept 50% of Whistler, so that might be their strategy. Cassiar, 1.4. So now we're starting to get in. We're still cheap. We're still well under $20. Cassiar 1.4, 28 million and this is in Canada, British Columbia. I think it's going to grow to two. They're hitting some good drill holes. Um, I do own it, but I don't know what they're going to how this thing's going to get monetized, what's going to happen. But I'm hoping, these all get revalued higher. Freegold Venture, 22 million ounces, but they're finding more gold, hitting some really good drill holes. I have it really highly rated because I think they're going to get to at least 30. They might get to 40, paying $15, but Eric Sprott owns 29%. Another group owns over 20%. They're not going to sell for, I don't think they'll sell for less than $80 an ounce. So it's currently at 14 and they might go 100 or higher. I have it at 100. So it's not quite a five bagger with 25% dilution. But Red Pine, another project in Canada, 1.7 million ounces, valued at 25 million, $14. There's a lot of these projects in Canada that are just really silly cheap. You can see that, there's a trend here, right? It's like all these Canadian exploration stocks are cheap. Maple, another Canadian stock, 1.5 million. It's growing in size. Actually, it's a 3 million ounce project, but Agnico Eagle has an option for 50%. And if they get to 4 or 5 million, I think Agnico will come back in. And they can't, there's nothing they can really do with that option. Since Agnico's locked into that 50% option, there's not a lot Maple can do other than drill this thing and then wait and then see if Agnico wants in or not. But I think it's going to grow to 4 million. So that would value it at 26. Scotty, another project in Canada. They just had their maiden resource. Wasn't as big as people thought. But I think this thing's going to grow to 2.5 million ounces. Maybe I'm wrong. It's definitely going to grow in size. Independence, another project in Canada. 1 million ounces currently. I think it's going to grow to at least 1.5. White Gold, another one in Canada. 2 million ounces, the Golden Saddle project. Actually, I think 2 million in the futures is they're going to find more than that. $20 in the ground. Vista Gold. This one's in Australia. We just got to see how they monetize this. I don't think they can sell it because it's too cheap. 7 million ounces at $22. I mean, even if they did 100% premium, is $44 a good deal for shareholders? No, I don't think so. West Haven, another project in Canada, 1 million ounces at $23. Moss in Finland, um, it's in a good location. I think they're going to get to 1.5, so that's 23. And then Provenance in Nevada, 1 million ounces. I think this one's interesting. I think that they could get to 2 million ounces. They do, you're paying 15. So those are the exploration plays. Now we're going to do dev. We'll do dev and small producers. Okay, so here we are. And silver's at the top. And it looks like we're doing pretty good on time. I thought, because I wanted to get this done within an hour. Um, yeah, we're doing really good on time. I've been talking fast, I guess. Uh, Sun Silver. I've been disappointed on how many drill holes they've drilled. They acquired this project in Nevada, 450 million ounces of silver equivalent. And they had a step out hole, really, really good step out hole over a year ago. And I was hoping, they'd be mining, at least 10,000 meters, 20,000 meters, get this thing drilled out and then know what you have because they just acquired the property. So it's a team out of Australia and they kind of disappointed me on how many, their drill programs, but it's a big project in Nevada. Keep an eye on it. So I'm going to take a quick pause here and I'll be right back. Um, yeah, one thing I wanted to say about developers and small producers, there's only a couple, I think three small producers. Optionality really is kind of focused on exploration. And so optionality for me defined is gold in the ground that's valued below market rates. So you're just buying gold and silver in the ground at, below what it's really worth. Then you have the combination at current gold prices or current silver prices, and then it gets kind of exponentially undervalued as the price of gold and silver goes higher. And so I think exploration kind of it fits the optionality definition more than so than a developer or a producer. But when I created this optionality list, I included the developers because it gives us an insight into undervalued developers or producers. Now, normally I focus on free cash flow, future free cash flow to identify undervalued producers or developers. But I decided to go ahead and do optionality as well. So this is a secondary mean. So you can go and you can look, okay, their gold in the ground is not getting valued. So if somebody tries to acquire them, they're going to get a great deal. So whoever buys them is going to get a great deal because they're paying a really good price for the gold and silver in the ground. So you can get an idea of what developers or producers are really cheap, and then you can also look at the free cash flow as well in tandem. Okay, so I just did Sun Silver. So Bear Creek. So Bear Creek, they have the Karani project, valued at $44 million, 275 million for Karani. I'm valuing it 250 million. That's 18 cents in the ground. Now, the problem with Bear Creek is that no bank is going to loan them the money with this small market cap. They acquired the Mercedes mine in Mexico, but it's been, it hasn't worked out well for them. They've haven't made very much free cash flow. I was hoping they would generate enough free cash flow that their market cap would get to 100 million and then they could maybe get a loan from a bank. But I don't think they need at least 400 million, probably 500 million to build Karani. So that's not going to happen, I don't think, even with silver. If silver goes so. But you want to own Bear Creek because whoever buys Bear Creek is going to end up with a great project. And so if somebody buys Bear Creek, you get Karani, and you're going to be happy. So it's like, I don't know if that makes sense to you logically, but it does to me. So I want to own it even if they don't build it. Silver X, small producer, but they're also a developer because currently they have 100 million ounces of silver, 100 and 200 million silver equivalent, and they're only mining 1 million ounces of silver equivalent. So it's really a development story. I mean, they could definitely get to 4 to 5 million ounces a year, but it's also a high risk. I have them as a C minus. They need they broke even last quarter, so they're kind of breaking even. But they need to build mines. They need to raise cash. So they're trying to get the momentum going. It is a good speculative stock, but it has a lot of high risk. Silver Storm. Um, we basically get San Diego for free. So they're going into production this year. They're going to produce 2.5 million ounces, and that alone is worth 48 million. Easy, right? 2.5 million ounces a year, silver equivalent. They have 150 million. Um, Actually, this 150 million includes San Diego, but their San Diego project is over 100 million ounces. I forget, I think it's 110, 120, something like that. Maybe 110. But San Diego should add another 4 or 5 million ounces a year, and we're kind of getting that for free. So that makes a lot of sense. Unico, this is down in Argentina. They've been consolidating down there. It's based in Australia, so it's kind of under the radar, but they have a lot of silver equivalent at 150 million ounces. I like that. Um, I own all of these projects. I own most. I don't know if most is right. I own most of these development projects. I do own these top, everything we've mentioned so far. I own New Pacific. I own. But if you own New Pacific, you want to also own Silver Corp because Silver Corp owns 28% of New Pacific, so nobody's going to be able to steal it. I think that Silver Corp is waiting for New Pacific to completely de-risk this thing, and then they'll acquire them. Um, so it's 60 cents in the ground. It's a good project. It's in Bolivia. There's not a lot of silver projects of that size, but it's perfect for Silver Corp, and I think they'll acquire it. maybe in a year or two. Aftermath. Aftermath, they're calling this their project Beringala manganese project. And the reason why is because um, it's has more revenue for manganese than silver. However, Beringala is 135 million ounces of silver, and the other is their second project. So Beringala is 135, and the other one's 65. Um, but I think what's going to happen is silver is going to go to 50, and they're going to realize, whoops, silver, it's really a silver project with manganese offset. So it's going to be a very, very low cost silver mine. So that's why I like that. Argenta is the project Frank Gustra acquired from Golden Minerals. It's currently 48 million ounces, which doesn't look, it's kind of small, but I think it's going to grow to at least 65, maybe 80. And I don't think this is going to be their last mine. I think Frank Gustra said he wants a silver mining company, so I don't think he's gonna be happy with one mine. So I think they're going to grow this thing. Silver mines, they have a permit issue. This is kind of a watch stock, but if they get that permit, this thing could really fly. Currently at 96 million, so people think they're going to get the permit. It hasn't crashed, but they're working on that. You can do some research into it. That's the largest silver project in Australia. Silver Tiger. Now we're not to go one more. Silver Tiger is a combination gold and silver. Their first project's open pit gold. I think it's going to get permitted this year. Once it gets permitted, they're going to get re-rated higher. I showed you that 5x what happens when you go from developer to producer. But they will double. I think they will double. Once they get the permit and they begin construction, I think once they begin construction, this thing doubles. And then we get to all the high grade silver, the underground, which is their second mine. So I'm excited about that one. Definitely own it. I do own silver mines. I do own Sargento. I do own Aftermath. I do own Chesapeake. So Chesapeake. Problem with Chesapeake is timing. This thing isn't going to go into production until 29, 30. So we're not even going to get a PF till next year. So this year we're kind of spinning our wheels waiting. And so I don't think we don't get a PFS until 26. So that's one of the reasons it's so cheap. They're very slow progress. But 13 million ounces of gold for 52 million, $4 in the ground for gold. You can't beat that with a stick, as I like to say. Stellar, big gold project in Canada, 18 million ounces at $100 million. I like Stellar. It's another one of those we're gonna have to wait till they permit it. It's a long, both I do own it. Chesapeake and Stellar are both long, long waits until they get to production. Hycroft, I own Hycroft. I mean, we just don't know how much. Um, what the cost is going to be, both the capex and how much the ASIC is going to be. What are the economics? I think we're going to have to go all the way to $4,000 gold before this project becomes economic. But as long as the ASIC's at 2,500, they should have an $800 margin. If they have an $800 margin, this is a 500,000 ounce a year project. So that's 400 million in free cash flow times 10, $4 billion company, and they're currently at 102. So that's a Hycroft is really interesting once you get to $4,000 gold. Wallbridge, I, I have FOMO for it, but the problem for me with Wallbridge is they had a really high capex, so their PEA wasn't excited about that. And I just don't see the path to production yet on Wallbridge. So I could be wrong, but you're $8 an ounce in the ground, which is pretty cheap. $42 million for 6 million ounces. It looks like a pretty good bargain, but currently I don't have FOMO for it. Unigold, they've had really slow progress down in the Dominican Republic, but the Dominican Republic now is starting to turn positive, but they haven't. They're still at 18, $9 in the ground. But Unigold, that's just a company to keep an eye on. The one bad thing about Dominican Republic is they're going to put a new law in where the taxes are just too high. I think it's 40%. Um, they're putting on basically a 40% tax in Dominican. I talked to Gold Quest about that. Um, and you can look into it. The 40% hasn't been, it's not a law yet. They're talking about it, but Gold Quest made a deal with them for 40%. And now, since Gold Quest agreed to pay 40%, now they're going to try to create that law for all the other mining companies. Now, I'm pretty sure they're going to grandfather existing mines in, but going forward, I don't know about the grandfather either. I'm just guessing there, but that's an issue. Okay, Goldterra, 1.6 million. Is that enough? Is that enough gold? Do they need to get bigger? I think they need to get a little bit bigger. I do own Goldterra. I'm hoping they can grow. It's a high grade mine. It's in Canada, but $10 an ounce in the ground is pretty cheap. Um, Lahontan, like this project a lot. It's in Nevada. They should be construction ready in 2 years. It got down to like $6 million market cap. It was on my list. We've been following this stock for a while. It was at six, it got all the way down to 6 million. I paid 2 cents for it when it was valued at 6 million. Now it's up to 20. Blink, it'll be up to 40. 10 million, 2 million ounce project in Nevada, oxide, excellent economics. Like I said, I think it'll be construction ready in 2 years, and then they'll permit it. I mean, then they'll finance it and build it. That's my expectation. Paramount, Nevada, 3 million. So this is the sleeper mine. So with the Grassy Mountain mine in Oregon looks like it's going to get built, confident there. That's only about a 1 million ounce project. They think they can extend the mine life a little bit, and then they'll go do Sleeper. So they haven't been drilling Sleeper. Sleeper's in Nevada. I think Sleeper is a big mine, a big property with a lot of drill targets. So we're getting Sleeper for free. That's the reason why I like it. $11. Spanish Mountain. They've sat on Spanish Mountain for long. This is in Canada. Low grade, open pit, big mine, 5 million ounces currently. So I'm valuing them at 4 million ounces, $12 in the ground. They're focusing on getting this thing permitted and built. So I'm excited about Spanish Mountain. I do own it. Falco, I own Falco. 5 million ounces for $13, 66 million market cap. Look at these valuations. 49 million for 5 million in Canada, 66 million for 5 million in Canada. Um, I think Falco might get taken out. I think Spanish Mountain has enough insiders to prevent it. Galleon, I do own Galleon. They need to grow the mine life, 1.5. This one is also, it's either in Nevada or Canada. But I like the economics of the project. If they can just grow this thing just a little bit, 1.5 is marginal. That 1.5 is kind of my minimum usually for development play. Um, Nova Minerals, 8 million ounces. I'm only valuing them at 5 million ounces, and it's 14. They've made slow progress. They're in Alaska, but it's definitely a company to watch if you don't own it. First Mining, they have 11 million ounces. I do own it. I own Nova too. I own the Mining. $14 in the ground. If they get that first mine permitted, I think First Mine's going to be a winner. We'll see. I'm nervous about that. A lot of people are confident. We'll see. Gold Shore or Troilus. So I owned Troilus and I sold it because it's done fairly well. 186. Well, not great, but it was a lot cheaper. My problem with Troilus is they just don't have enough insiders, and the capex is just huge, like $1 billion. But now it looks like they're able to finance the capex. They could build it, but I don't think they have enough insiders. If you look at their insiders, it's less than 15%. So if a major comes in and makes an offer, I think they'll take it. So that's why I sold. I just traded it for and something that I think that won't get taken out. Gold Shore, I do own Gold Shore. I'm nervous about permitting there because they have a lot of water, but $15 in the ground for a developer. Anytime you can get a developer under $50, it's cheap. And anything under 20 is really cheap. Um, Talisker. Um, a lot of people really like the stock. I own Talisker. Currently 2 million. I think they'll get to 2.5. So you're paying $16. Talisker, the issue with Talisker is going to take about 3 years to ramp up production. This year, production is really low. I think like, I don't know, 10,000 ounces, something like that. Not very much. And then next year, it doesn't really get much better. I think we're only like 20,000 ounces in 26. So we have to go all the way to 27 before Talisker really starts kicking in. Um, but I've seen some numbers for next year, thinking it's going to go higher free cash flow, but Talisker definitely a stock to take a look at. At $16 in the ground for, they're actually a producer. So you're paying $16 for a producer in the ground, which is silly, crazy cheap. Should be more like 100, at least 100. So they haven't gotten revalued higher. That's International Tower Hill. I've owned this stock for a long time. I like it. It's 13 million ounces, the Living Good project in Alaska. It's economic. They have strong insiders. It's going to get built. All they need is a permits, and they'll start construction on this thing. It's going to get revalued at a certain point. Um, $17 for development project. I'll take it. I own it. Liberty Gold, I don't own. I've had FOMO for it. Problem there is management. I just haven't been excited about their plans. But now their plans are starting to get better. Now they're starting to talk about, getting this mine built. If they would have been talking about building this mine 2 years ago, I might own it. Next Gold, I own. I like this stock a lot. 5 million. I'm surprised it's this cheap. 5 million ounces for $19 for you're getting one project for free. They have two 3 million ounce projects and in Canada, in good locations. They're both going to be permitted this year, and it's valued at $19 in the ground. It's silly cheap. Revival, they're further out. They're not going to be both of their mines. They have to build three mines. Next Gold has to build two, but Revival's not as close, but they're only a little bit more expensive. And Next Gold should be valued more than Revival. Um, well, they are a little bit, but um, $20 an ounce in the ground. I have them at 6 million. Um, but Revival, good locations, Utah and Idaho. They have three projects to build. The first one, I don't think we're going to see production for 3 years, so it's a bit of a wait. Next goal is 2 years out. 1911, big fan of this. I think True North. I own Next Gold, I own Revival, I own 1911. 1911, I think the True North mine will get built. Probably we should get in, I'm hoping, within 24 months. It should be in production within 24 months. Valued at 34 million. This True North mine was valued at $1 billion in 2012, 2011, 2012, somewhere in there. And then they went bankrupt as costs came down. I think this thing's going back to a billion. Um, it's at 34. Um, I think it's going back to a billion. Maybe I'm wrong. Maybe it won't get there. Maybe it'll only get to 700 million. But the upside on this thing is pretty significant as a producer. If now they have to get to 1.5 million ounces. So they're currently at 1.1. I think they'll get to 1.1, get to 1.5, and then expand the mine life, mine 70,000 ounces and expand the mine life to 12 years. Then it should get to at least 500 million is my guess at $5,000 gold. Newfound, I like this. I own this stock. I think Newfound, um, I'm valuing it at 12 million ounces, at $23 in the ground. It's actually worked out, I think, for investors because there's these problems they're having because it's gotten really cheap. It's gotten, at one time, Newfound Gold was valued at $1 billion. I know it was at least 900 million, and now we're at 277. I think it got down to 225, something like that. Now it's up to two, it's bounced a little bit. But I think they have a lot of gold in the ground. They're showing only 2 million ounces, but their drill holes, I think they have at least 10, and I'm having 10 to 12, 10 to 15. And they've had to pivot into development because they can't sell the company at 277. There's too much gold on their property to sell it. And they could JV it, but they're like, why JV? Why not just build it ourselves? And that's what they've done. They brought a new CEO in, so they're going to do that. Horizon Gold. 2 million ounces in Australia. Um, you know, I don't I've taken a look at it. It's definitely interesting, but I don't own it. A little bit of FOMO, but I don't own it. Sonora, I own Sonoro because I just think Sonoro, once they get into production, it's going to get revalued higher. So it's up to $30 an ounce in the ground. So it's not super cheap, but um, it should be a five bagger. I mean, its value market cap is 29 million, and they're going to produce, I think, at least 50,000 ounces. And they should get you, they pretty much know they have 1 million ounces based on existing drill results. I think it's going to go to 1.5 million ounces. So 1.5 million ounces, they get production to say 70,000 ounces. Its current market cap is currently 29 million, so that kind of works. Canagold, I own Sonora. I used to own Canagold and I sold it because I didn't like the location and then the short mine life, 1.2, but if they can grow this thing to 1.4 million ounces, which maybe is a stretch on my part, but usually when a company they get into production and they start drilling, they find more gold. So I think Canada that's in British Columbia. Probe, I recently bought Probe, 10 million ounces. It's just a big project. Like I said, if you can buy a good development project for less than $50, those are pretty cheap. Because usually it'll go to 250 once in production, the value of the gold in the ground. Probe is another, it's in Canada. It's going to take a while to permit, but they're making progress. Cabral, I think Cabral will um, get taken out by G Mining. I'm just hoping that they so you want to own G Mining. If you own Cabral, you want to own G Mining because G Mining's right next door. They have that mill. It's not a long life mine. Cabral has a better property, and so it's just a perfect fit for G Mining. I just don't see how Cabral is going to be able to fight them off. It's like, but I'm just hoping they get a good price. So they're currently in 90. Uh, I I think I'm nervous about this. I think at 150 million, which isn't even a 100% return, I think they might sell 150, 180, 200. But I think G Mining's got to buy that thing by 200 million. It's just too good a fit for them. Um, because Cabral just keeps getting bigger. They're 1.6 million ounces. I think the thing easily gets to 2.5. So it's a lot of gold on their property. They're going to go into production, but yeah, I wish G Mining wasn't next door. Thesis. I own Thesis. I do own Cabral, by the way. I own Thesis. Um, I own all Barton. I own Barton. I own Challenger. I own Westvault. So I own the majority of this list, a vast majority of it. Thesis. So this is a project in Canada. I think it's at 3 million. I think it's growing to 4, so $40. These last ones aren't super cheap, but they're good development plays. So they're not only a good development, but they're kind of cheap. Barton, um, they've been starting to trend. They're at 105 million. I think they're 42. This one's in Australia. Challenger, Challengers in Argentina, they have a high grade open pit, and then they also have underground. And then they have another mine in Ecuador that's not on here. So the 2.5 million is just the gold mine in Argentina, but then they have a 4 million ounce gold copper project in Ecuador. If that project was more advanced, it would be on here. And then West Vault, zero point 0.8. I think it's going to grow to at least a 1 million, which is 53. So it's not super cheap, but it's a pretty good optionality play. 53 million ounce. This is a construction ready project in Nevada. So you're paying $53 million for that. And it's probably 60,000 ounces a year. It's construction ready. So my concern there is they're going to sell it. Will they sell it for um, I think at least 100% premium. So the downside risk is pretty low. Okay, that's your updated list for optionality.